This week in the stock market is going to be huge. What is the crack, everyone? Welcome back to Buy or Sell. I hope, of course, you're all well. Might notice a few things different. The camera quality should be different, should be better. I have a new camera setup. However, I'm having microphone issues, so I'm using a built-in microphone, so the quality mightn't be as good, probably a bit more echoey. I will get it sorted as soon as possible, but it was either do the video without it or do no video. So last week we did say Fed meeting was huge. That was the big indicator. Tuesday, Wednesday was the Fed meeting. Once we got ideally the clarity that we wanted, nothing worse than expected, the market should react positively. I put into the Discord group, well, he's done what I fear, sent the markets to Cape Town. That's why I sold my swings Monday. Hopefully he has all this something similar. And on that dip, I bought some Dollar Tree and Albertsons because I'm still believing in the recession stuff going down the road. But then markets started to appear to be going back up. So it was a weird one. I kind of sold in my swing positions, was able to buy in my Dollar Tree, my Albertsons, stuff that I sold at more higher up. I was able to buy lower. So I was happy enough with that. But I would have liked to have got a lot more money in the trades. And then on St. Patrick's Day, I had a few beers with me and I thought, you know what it is? Let's not be fearful. Let's get the money into purple bricks. And I seen by the following day, it was up, as you can see, 46%. So we did very well on the purple bricks. Well done, Mr. D, for pointing out that treat. I sold my Dollar Tree on Monday, so about here, and then on the dip, as I said, when the Fed meeting news came out, we did see a bit of a general pullback across the board. You can fact check that. So then I bought back in on said dip, and now I see myself up about 5% in that position. So all in all, the swing trades that we had, we closed them out, rebought, did what we did, fantastic. Market surged this week after the Federal Reserve announced it would raise its target range of the federal funds rate by 25 basis points to 0.25, 0.5, as expected to fight inflation. See then the change in asset classes. Oil still throwing, the commodity still throwing, the dollar's doing okay. This is still by the date, but we can see a bit of a change in the stock since last week. Events calendar, Nike, Tencent, and then we've got Adobe. Some of the big players still reporting, always going to report earnings. One big one I'm keeping an eye on is NIO. I've got some small position in NIO, and what a position to have. From the real highs to the lows, it was down as much as 74%. So it seemed like you had to be buying at these prices. It's still a great company, although the China issues is for a different story, for a different day. But on the week, this stock has went parabolic, up 60% almost. So NIO was a treat. Earnings could really pop this thing even further because it's still so beaten down. Investors come off a strong week looking for more gains now that they have had some clarity from the Fed meeting. We've had a great couple of days. It's become a buy. We're still below 180. We're still concerned yet. We'll still see things are starting to turn around. It looks strong. It looks good. You know, I like to look on the weekly chart. And the weekly chart, guys, has been beaten down since December. We have been downwards, downwards, downwards. It's become a buy symbol. This is where you buy. The SPY, we talked about this level. It could potentially get down to as low as these here. This is where you want to be buying. So we've been nibbling and we're talking about it. Did my video, everyone was selling. Everyone's been selling for weeks. And I've been saying, no, now is not the time to be selling. Now is the time to be in this market. I did my video last week. I put out all the risks and I'll share the link to that video. Go in. There is so many things to be fearful of. However, you have to be greedy when others are fearful. And this has throbbed. This is the turnaround we've been waiting on. How long will it last? We will wait and see. I went for a green list. NIO looks strong. A couple of buy symbols. RSI, MACD, all the things you want to see. Looking good. The only thing I'll say is we're below 180. And that'll be a reoccurring theme here. Let's talk about Argo, one of our long-term holds. Starting to look good. Starting to show reversal. But we are well below. There's no 180-day moving average here because it's not been going on the Nasdaq that long. Purple bricks, the Robin. Well, below our 180-day moving average though. We're still holding this. Look at this RSI. It's gone a bit parabolic. Take profits. That's what I've said in my Discord. Taking profits. Up 22% now. Looking overbought. I sold some there, but still holding. And that's what you've got to do. You've got to protect your hard-earned gains, guys. Stocks for this week would be Nvidia. Perfect. Look at the setup. Everything's looking good. We're above our 180-day moving average. We're showing real strength. So Nvidia would be one that I'd be watching very closely this week. Airbnb, I have a small position currently, but I would be looking to add, if we can, especially if we get one more day, we're above the 180-day. Hold, we're going to the moon. Tesla, oh baby, Tesla. We've been talking about Tesla on the channel since the day I started the channel. We can see here we've been in this channel that I've been talking about since the start of January, nearly 4 months of this downward wedge going down, down, down. And what happens in the downward wedge? you break out, you usually go bullish. We have broke out. We've got 2 candlesticks, but definitely one for confirmation. We're about to go above the 180 day. Tesla looks very strong. Dollar General, another stock that we bought, and it has done nothing but throw. We didn't play earnings. We're currently up about 4% on that trade. Again, this is my recession play hedge. Dollar Tree, Albertsons, Dollar General. I'm going to spread the amount that I would like in that position across all 3, just minimize the risk, all roughly the same space. Amazon, we're getting there, tipping up, going to become maybe a buy symbol, waiting for the 180 day to happen. Applied Materials, we've talked about on the channel before, again waiting for that confirmation of the 180 day moving average. Apple is becoming very strong. We've always been above the 180 day moving average. It'd be nice to see us get above the 20 day moving average for more recent strength. That looks good as well. Now it becomes a land of luxury. Every stock you will look at will show strength. It will be looking good. However, you can be more picky now. Look for the 180 day. Get more confirmation, more security. And if you don't know how to do all this, you can get into the trading course. The link is down below. Get in, get learning, make this, learn how to protect yourself, capitalize on this. We make money in the downtrend, uptrend, side trends, all trends. We make money. That's the only trend you need to know, is the trend is we make money. The Dollar Tree dream, the Dollar Tree dream doesn't end, guys. It just doesn't end. Look at the Dollar Tree dream. My indicator that I custom made, built, part of the trading course. Guys, we're up 16% since the 18th of February in a month, 16% on Dollar Tree, the most boring recession play, dividend play, 16% lovely job, lovely. Bank of America again with the interest, the Federal Reserve stuff starting to look good. We'll see if it gets above 180 day moving average. Caterpillar, I closed it out, I haven't opened up, but it still looks very strong. The only reason I'm out of it is because we have become overbought and it's starting to dip, and there's just so much treats out there. I'm just not that passionate about it. The other one that I have opened up a position in is Berkshire Hathaway, big Warren Buffett, big balls. Let's go. Why did I open up a position on this? Because I thought, why the hell not? Buy symbol came in on the 16th. I opened up a 2 times leverage position because it's a bit more boring. Nice steady gains with big Buffett always. The watch list I have is long, it's long-winded, it's huge. You could go in and check any of them. Most of them are going to have this similar pattern as I'm talking about here. A couple of days of buys, starting to look like a bit of strength. One that I'm watching is Tattooed Chef. Again, another one of these following wedges. If that gets above that, we can see bullish times coming on that. So look, just be careful. Like I said, we can be picky. You can look at the 180 day moving average now and use that as your baseline. If you're above all those averages, showing the right incline, showing the things that we talk about in the trading course, you will make plenty of money and be safe. And that is the video. Look forward to the week ahead. Big week ahead. I'm pretty damn sure of it. Hopefully, fingers crossed. The only spanner in the works that could come would be something massively bad in Ukraine. But I don't want to dwell on anything too negative. Trade carefully as always. Check out the video we did on Wednesday. We talk about all the risks. You need to know that because it's still there. It's still going to happen. There's still a recession coming. Grim times, all that. But let's just rejoice in this moment because we have actually finally, for about the first time in 8 months, I've actually been able to do a video with a smile on my face. No doom and gloom. No Cape Town. None of that. Enjoy it. Protect yourselves. Learn the game. See you in the next video. Peace.
Yeah. Coincidence. Yeah. Coincidence. Yeah. Coincidence. Something that happens by chance, I think not.